Yeah, today I'm going to be presenting on the metaverse and our fund and index, which was the first ETF and index listed in the United States to track this space. And I'm going to get into a little bit of, why we thought it was the right time to launch the metaverse fund last year. Is the metaverse really ready for investment? All common questions that we get, and I'm sure questions that are at the top of your mind as well. So our fund is designed to offer exposure to the metaverse by tracking the Roundhill Ball Metaverse, by tracking the Ball Metaverse Index. The Ball Metaverse Index was created by Matthew Ball and his expert council, and is intended to track the 7 distinct sectors that are going to comprise the metaverse in the future. This is a proprietary methodology that Matthew developed, and if you don't know who he is, he's one of the leading voices in the metaverse, having authored numerous essays on the space and having had conversations with people like Mark Zuckerberg from Meta and Tim Sweeney from Epic Games. So really a popular figurehead in this space, and someone who has been able to deliver a lot of value for the index and the fund. The metaverse is best understood as a successor state to the internet, similar to the transition from stationary to mobile internet in the late 2000s. I think just as you think of the iPhone as being this transformative instrument that migrated the majority of web traffic away from desktops to the smartphone, the metaverse, when it's developed in the next 5 or 10 years or whenever it may be, will similarly divert a lot of traffic from mobile into the metaverse and represent the main way which people access the internet. The metaverse is going to be comprised of persistent virtual worlds that bridge both the physical and the virtual, and will be populated by hundreds of thousands, if not millions, of concurrent players, all operating synchronously with little lag and across borders. And I think that's a really important point for the metaverse, and part of the reason why we don't quite have the metaverse yet in our daily lives. A lot of people point to virtual platforms like Roblox or Fortnite and say, oh, this is the metaverse, but it's really not. That's just a game. It's a virtual platform that can facilitate 100 players at a time. In Roblox's case, it's 700 in the beta, but the metaverse really envisions something greater and something a lot more expansive. We believe that the metaverse is enabled by 7 key categories, and these are computing, networking, virtual platforms, interchange standards, payments, content, assets, and identity services. And let me just expand my screen a little bit, as well as hardware. All 7 of these are vital components of development of the metaverse, and I don't think by missing one of these, we can see the metaverse come to fruition. And let me just run down all of these categories and give you an example of what I mean. So for computing, these are companies that enable and supply the computing power to the metaverse. You can primarily think of graphics card manufacturers, CPU manufacturers, companies creating the data centers to power large-scale infrastructure and operations. And these same companies will also power the metaverse, because that infrastructure is just an extension into something greater. In terms of networking, companies providing the real-time connections, bandwidth, and data services to consumers. Think of this as the data and the bandwidth analog to the actual computing hardware that is going to be rolled out. So cloud computing companies like Cloudflare, for example. Virtual platforms, companies that develop these immersive digital experiences that we currently associate with the metaverse, and are going to comprise the outermost layer of the metaverse. And when I say that, I mean, we're going to have this infrastructure layer at the bottom, but as we kind of build up, really what you're going to be interacting with as a user and a player is this experience layer. And that's where platforms like Meta platforms, formerly Facebook, their Horizon World software, which allows you to play with other people in real time. You have Nvidia with their Omniverse that enables real-time physics collaboration, and all of these would be impossible without that infrastructure layer, which still needs to continue to roll out. Interchange standards, these are companies building the tools and the protocols for the metaverse. Think about the file standards that we may have to use. Think about stuff that can be built on the blockchain to ensure that users coming into the metaverse are properly able to interface with each other without conflicting standards. Payments, we alluded to this in the poll earlier, but digital payments are going to be pivotal for the metaverse. And this is somewhere where cryptocurrency is going to play a premier role in reducing settlement times, removing the intermediary from transactions, and facilitating a seamless experience where people aren't transacting in fiat currency and have to go through the cumbersome process of exchanging one currency for another. Instead, we're going to have one or more currencies that are transferable among all of the users of the metaverse, no matter where they may reside. Content assets and identity services. This is kind of similar to interchain standards, but this ensures the protection of virtual goods tied to someone's account. The blockchain, again, will be pivotal here in ensuring security, ensuring items are all authentic, aren't duplicated, and are verifiable via a series of transactions on the blockchain versus a good that may have been stolen and can't be verified. And then lastly, hardware. This is everything from virtual reality headsets to alternate reality headsets to perhaps other mediums which people will be able to access the metaverse from in the future. And you can see in this graphic on the left, we have all of these categories circling the metaverse because, again, the metaverse will not be possible without each of these 7 categories falling into place and with them being rolled out and eventually amalgamating to create the metaverse. And we're not there yet in any of these 7 categories, which I think highlights the immense opportunity in front of us. In hardware, for example, we have very powerful GPUs and data centers, but due to Moore's law, we can still get a lot more powerful, and we will have to get a lot more powerful to allow for these experiences that the metaverse envisions, where you're interfacing with millions of people in real time in these very complex 3D environments. And you take something like virtual platforms, for example, even, headsets are constantly iterating. We keep seeing new technology come out, prices come down. It wasn't long ago where an Oculus headset was close to $1,000. Now you can pick up an entry grade Oculus, which is the headset with the largest market share and is of course owned by Meta Platforms currently, for $250. So we're seeing significant progress in all of these sectors, but we are not quite there yet on any given sector. So part of this thesis is we believe more virtual platforms will emerge. You think about Roblox, for example. This is a title that came out in 2006, but really only saw substantial adoption in 2016 and later, and now has over 200 million monthly active users. As of their latest disclosure, I believe they have 54 million daily active users. This is an enormous platform. And while the demographic is currently focused on younger children and teenagers, we're seeing it slowly shift to young adults and adults as well. And I think there will be more virtual platforms that specifically target that demographic as well, versus something like Fortnite or Roblox, which are targeted at a younger audience. These platforms are lucrative because they take the entire game industry from the engine side of things. For example, Roblox publishes Roblox Studio, publishing, monetization. On Roblox, you can purchase Robux, which is the premier in-game currency, and transact with other players for cosmetic items. Analytics, live services, player networks. A crazy stat is that more messages are sent on Roblox every day than WhatsApp, which is just kind of crazy to think about. But that's where we are with some of these platforms, while allowing users to enjoy a much wider range of experiences and on more devices. Roblox really started as a desktop application, Now you can access it from a console, from your phone, from VR headsets as of a few years ago. And new virtual platforms will emerge, capitalizing on these new constant iterations of technology. When Mojang sold to Microsoft in 2014, Minecraft had more monthly active users than any Western title in history. But 7 years later, the transformation has not stopped, and Minecraft continues to grow, now 6 times larger than it was in 2014 when it was already taking the world by storm. And again, that's a game where these servers can facilitate 100 or more players concurrently, a very important aspect of the metaverse, but not quite there, which highlights the tailwind that I was just talking about. Now, in terms of the market size, which is something we're asked commonly about as well, Bloomberg Intelligence believes the market opportunity for the metaverse can reach 800 billion by 2024. And importantly, while this sounds like a really big total addressable market, it excludes the Ball Metaverse hardware, networking, computing, and payments categories. This is primarily focused on the experiences layer. So virtual concerts, for example, Marshmello, Travis Scott, all did virtual concerts in Fortnite, listened to by tens of millions of players each. And that's just the tip of the iceberg. And I believe the stats for Travis Scott is that he grossed more money from a 10-minute virtual concert than from an entire leg of his Astroworld tour, which was grossing $1 million a show. And then you have 21 Pilots, another popular band here that performed in Roblox. The crazy stat there is they sold more in virtual merchandise than really almost over the lifetime of their touring history, just with one small show. I think the number there that was reported by Roblox's head of creative was $20 million. And again, the market opportunity that we're highlighting here excludes hardware, networking, computing, and payments, all of these infrastructure layers that have to be built out for the virtual worlds to be built on top of. Another estimate is ARK Invest. They estimate that revenue from virtual worlds, again, that more narrow scope, could approach 400 billion by 2025, up from approximately 180 billion in 2021. In terms of the technology breakthrough, what's going on is really amazing. I highlight Unity here, as well as Fortnite, which is built on Epic's proprietary Unreal Engine. But these only came to fruition in the last couple decades. And Unity and Unreal, when you take those two engines and you combine them, you have more than 80% of the global games market that is developed. And with Unity, I believe the market shares are on half. With Epic, it's like 30 to 40%. But these are relatively new engines and new technologies. And they have allowed countless experiences to be built on top of all of these experiences, which are going to seed the metaverse. And it's really exciting to be invested in these companies and to look at what their progress has been as they roll out new versions of their engines, as the technology gets exponentially better, and as graphical capabilities approach really what it looks like in real life. I would encourage you after this webinar to look up Unreal Engine demo for the new Unreal Engine 5. And what they've managed to do is really incredible with these photorealistic simulations. One case study here is Epic Games through their Unreal Engine, which they used to develop all their own titles as well as license out for a fee to other creators. They created Fortnite, which is an extremely popular battle royale game that I'm sure most, if not all of you, have heard of, and is a company leading the metaverse forward. In its first 2 years, Fortnite generated over $9 billion in revenue for Epic Games, and we're talking about one title, a single title, and this is remarkable. And this highlights the shift of media away from video, which was for a long time the most popular form of media, to gaming, where you have Grand Theft Auto 5, which is a title that came out in 2013, as the single highest grossing piece of media in history. Epic Games recently announced a $1 billion funding round to support the company's long-term vision for the metaverse. The valuation for Epic Games has swelled. I believe the latest number is 28 billion for Epic, and really almost all of it is Fortnite, the Unreal Engine, as well as their digital distribution platform, the Epic Games Store. We think that the metaverse is going to transform the future of work as well. Post-COVID, we are seeing the majority of companies either adopt a hybrid model or a remote model for their employees versus the previous standard, which required everyone to always be on site. And you have some of the largest tech companies developing solutions for this. For example, Microsoft developed HoloLens, which is their alternate reality headset. And through that, they have a software application called Mesh, which allows creators to collaborate in real time by wearing an alternate reality headset, looking at models and projections in front of them, and being able to draw out model their ideas in real time and in front of their coworkers. That's just one example of the technology that I think we'll see in this future work environment, where I really don't think that the entire world will permanently revert to an on-site model. I think the future will always have some semblance of hybrid or remote work, as well as collaboration with individuals across geographies. I don't think teams are going to be constrained anymore within a country. It doesn't really make sense to have someone travel 14 or 15 hours to come visit you when you can just put on an alternate reality headset and have a seamless experience that in many ways is better than the one you would have face to face.
Yeah, this is just jumping in. Looks very, very interesting. The projections that you have there, and I guess like the COVID pandemic has kind of accelerated this trend as well. And it is not just a temporary thing now. It is something that will become kind of prevalent in our work environment as well. That's something that I'm witnessing right here in Singapore and regionally. But I'm sure similar trends would be happening across the world on the Western side as well.
Yeah, we're seeing companies from a variety of industries transition to fully remote work. And a lot of it has started with the gaming industry. There are gaming publishers and developers that their entire team currently lives within virtual worlds. And they have meetings in VR and AR. They ideate in VR. Everything for them really comes via the virtual world, and I'm sure a lot of them haven't even seen each other face to face. And this is a phenomenon that has been facilitated in the last couple of years, and the technology is expanding to meet that need. And it just so coincides that technology is the same tech that the metaverse is going to need. So in terms of opportunities, I don't think there has been anyone more optimistic on the metaverse than Nvidia CEO Jensen Huang, who said that the company is going to be a premier name for the metaverse, going into the virtual world with their Omniverse software, which again is a tool that allows people to collaborate in real time, create accurate physics simulations, and the uses for Omniverse are constantly expanding by the day. Another interesting quote by Jensen Huang that I don't have here, but I want to highlight, is he believes that the metaverse's economy will eventually transcend the physical economy. And this is a crazy stat because I think the World Bank says that the global GDP is like 70 or 80 trillion. So you can imagine for the metaverse to surpass that, it'll probably take a number of decades. But if it happens, we're talking about not only the biggest innovation since the mobile internet, one of the biggest innovations in in finance and society in general. I just want to highlight a few case studies here towards the end of my presentation. The weights, constantly shift in our fund depending on intra-quarter performance. Our index and our fund rebalance quarterly, but a name that has been at the top for a substantial portion of the index's life has been Nvidia. And while we don't publish the exact categories that our names are in, nor the weightings they have within these categories, which are the two primary weighting components, by the way, for the index. How many categories are you in? Which categories are you in, as some are weighted higher than others? And then within those categories, what weight do you have assigned? You can imagine Nvidia at 8.4% of the fund is weighted highly in multiple categories. And this is a company that pioneered the GPU. All of your computers right now have graphics cards, either dedicated via someone like Nvidia or AMD, or integrated on your chip via a company like Intel, though that is slowly phasing out as more computers transition to dedicated GPUs to meet the immense amount of computing power that's needed for these future applications. For their segments, they have their GeForce graphics cards. These are one of the premier GPU lines in the world, competing with AMD for market share in terms of dedicated graphics cards. They have their cloud and data center segments, which cater to institutions and corporations and large users of data. And then they have networking via some cloud solutions. They purchased Mellanox, I believe it was a couple years ago now. And then the Omniverse collaboration suite, which has made them a premier name in software as well. Tencent is another company we have in the fund. And they are an example of a gaming platform. So Tencent has a 40% stake in Epic Games, which is a private company, but this is some of the best exposure you can get to the growth of Fortnite and Epic, as well as numerous stakes in other companies as well. They own 100% of Riot Games, which is the developer of League of Legends, the most popular MOBA in the world and one of the most popular games in the world, and the developer of Valorant, one of the top first-person shooter titles. And then they also own QQ and WeChat, which of course are the Chinese super apps that bridge together 700 or 800 million users into a collective social media network. And then lastly, on this list, we have Roblox, a gaming platform that has seen exponential growth in recent years, growing revenue by a triple-digit percentage for the last couple of years. Is just the synthesis of kind of everything I talked about. On the engine side, they have Roblox Studio. On the social media side, more messages are sent in Roblox than WhatsApp. The entire game is a virtual platform where you can play in any number of levels with individuals or your friends. Roblox also has significant computing capabilities, both in-house and third-party, to facilitate these experiences. This is just some stats on our fund. We recently cut fees from 75 basis points to 59 basis points, which should help investors out a little bit. But for this active methodology that we're employing, we think that in the future, Metaverse ETFs are going to become core holdings of investors' portfolios. And we hope, similar to the way that large technology ETFs like QQQ are used as a growth component in people's portfolios, Metaverse ETFs are seen similarly. This is just our country and our market capitalization breakdown. For country, you could see that the fund is about 80% US and about 94% large cap. This is not necessarily intentional, but more of how metaverse development has shaped out, where we are seeing the largest companies, primarily in the US, become the lead innovators on the metaverse. Companies like Nvidia, Microsoft, Roblox, Unity, all top weights of the fund and all large cap United States tech companies. But we also have, exposure in South Korea, in Singapore, of course, and then other at 11%, primarily in various other European and Asian Pacific countries. And we envision, as the metaverse continues to roll out, this fund will start to look a lot more global in nature. But right now, the US is kind of the main hub of innovation for the metaverse. And this is just a graph of our top weights, our top 10 holdings. From the top left, you can see Nvidia at an 8.4% weight, down to Amazon at a 3.6% weight. And while there is some overlap between other large cap tech funds, at the end of the day, we have names like Roblox, Unity, Autodesk, and C in large weights, which you wouldn't see in the top 10 of most other tech funds. And that's it.
All right.
Thank you so much for listening, and I am open to any questions.
All right, thanks, Mario. Maybe you want to go back to one slide. I think that
Sure.
slide will be very interesting for all of our viewers. All right, the one with the tickets.
Next one, right?
Yeah, the ticket symbol one. You can hold there for a bit for our viewers.
Is it this one?
Yeah.
Okay.
Okay, so I have two questions, right? So earlier on at the start, you mentioned that there's 7 categories that like forms the layers of metaverse, and
Correct.
you mentioned that they are still in a very early phase. So based on these 7 categories, right, which one would you think is like will be the first one to be successful, and investors should look out for?
Mm-hmm. I think the first is most likely virtual platforms. We have seen steps towards maturity with virtual platforms, for example, Fortnite, Minecraft, VR chat, which is a popular application on Steam that users can interact with each other in VR. I think virtual platforms is the one that we're going to see first, and the one that people associate the metaverse with the most. I think when you think about metaverse, you think about VR experiences, and you think about jumping in and talking to hundreds of people and going from experience to experience, and all of that is facilitated via these virtual platforms, versus the payments and the hardware and the computing layer, which are also exciting, but not, I think, what people think about when they think of the metaverse. So for companies, the closest opportunity to associate with the space is via virtual platforms.
All right. So we are looking at some of the meta platforms like Facebook itself, am I right? That is trying,
That's right.
or like Microsoft, they're trying to do towards this omniverse, am I right?
Yeah, so Meta, via their Quest series of headsets, I believe they
Yeah.
were recently rebranded from Oculus Quest to Meta Quest. They have something like 40% market share when you look at statistics on Steam. And then Microsoft, with Microsoft Teams, which CEO Satya Nadella said is going to be one of the core messaging apps for the metaverse, as well as Mesh, which is that software I alluded to earlier, and then HoloLens, which is their alternate reality device. These large cap tech platforms are making great strides towards this.
Right. Interesting. Okay, so we have one question from the viewers. So his question is about the development of using metaverse facilitating remote and hybrid work. Would you expect like cybersecurity companies to actually come out strongly due to the need for all the software networks?
Yes, and I think that's been highlighted recently with a string of cybersecurity incursions that some of these cloud computing platforms have seen. But cybersecurity is going to be pivotal, and I think not only will you see cloud computing companies reinforce their own infrastructure to prevent these denial of service attacks that take down all of these websites at once. For example, every time Amazon Web Services goes down, people are in shock. Almost every website on the internet is down because that service controls so much of the cloud. that's only going to increase as the metaverse is developed. And for the metaverse to be knocked offline, if it's going to be this multi-trillion-dollar economic opportunity, even an hour or two of downtime are going to be disastrous. So cybersecurity is going to be very important. And I think you will see dedicated firms pop up that address this issue, as well as integration with the top cloud computing platforms currently.
I see. All right. One interesting question by one of you again. So he mentioned that this ETF looks a lot like a growth fund, and in this current climate with rising interest rates, what's the view of investing into such ETF?
Yeah, so it's definitely been a challenging time for, I think every growth fund out there. Interest rates are poised to rise. We have geopolitical uncertainty. And we've seen a shift away from these growth tech names into commodities. And I think what is important to reinforce with a fund like METV is that this is an opportunity for the next 5 or 10 years. I think part of the euphoria that we saw in 2020 and the rise of day trading led to a lot shorter centric attitude when it comes to investing. But investing is something that you're in for a decade or more. And I don't think people that can't stay invested for that time horizon should be allocating heavily into any growth tech fund. But for people they're in their 20s, 30s, 40s, or even 50s who are still ways out from retirement, this is something to consider, unless you think you have a crystal ball and can time the market and know when this drawdown is going to end.
Yep, I couldn't agree to that more. So I believe that investing is definitely a long-term game, and especially to companies such as or ETFs such as METV, it will definitely needs a longer time horizon in mind when you wish to invest into them. All right. Ritesh, do you have any questions that you want to ask?
No, I guess very well covered, Wilson. Very relevant questions. I think, especially given today's news bites that are coming in, a lot of growth-related stocks as well as ETFs are particularly impacted, as well as the broader market. And what lies ahead of us could be a volatile ride. But again, as Mario mentioned, if you are ready to hold it, and if you're looking at a multi-year kind of a horizon, then these kind of phases have happened in the past. And typically, while the journey and the ride might be super volatile in the short term, over the long term, you can expect bounce backs as well, because the opportunity set is so huge, and a lot of this is still so much unexplored. From that standpoint, I think the growth that you can expect, and a lot will unfold over the coming years as well.
Yeah, and there's even opportunities for value investors now in this space. For example, if you look at Meta platforms, when you remove cash from their balance sheet, I believe they're trading at a PE of 14, and that is a valuation that's associated with a value company, with a very mature company. But this is still a company that is growing by a double-digit CAGR every year. We'll be investing $10 billion a year minimum in developing the metaverse. Doesn't sound like a company that should befit that sort of valuation.
Exactly.
Shall we do one last question from the viewers before we move on? Okay, so one question by our viewers is asking will Metaverse face a challenge in terms of mass adoption? Would there be social resistance, or would there be resistance from a social point of view from people that people might be addicted to the virtual world?
Yeah, so I've actually written about this extensively as it relates to the metaverse developments in China, but I think there are going to be probably 2 quote unquote metaverses. Ideally the metaverse bridges every geography, every border, but China, for example, has made it pretty clear that due to local regulations and due to the types of activities that they monitor on the current internet, metaverse being a successor state to the internet will face that same scrutiny. So I think it's very unlikely that the metaverse of the quote unquote West makes its way to China. And we have already seen a crackdown there when it comes to playing time. For example, gamers under the age of 18 can only game 1 hour each on Friday, Saturday, and Sunday there. The metaverse could be subject to that same scrutiny. And if it is, if it necessitates development of a separate entity there. In terms of other countries, I don't think that that type of blowback will necessarily be seen. People use the internet, the mobile internet, upwards of 4 hours a day. The metaverse could probably have a similar time for users, but instead of using your mobile phone, you'll be using a VR or an AR headset. So it's not necessarily a departure in terms of the amount of time that you're spending. It's just a change in the means of which you're accessing it.
All right, I see. Okay, so I think that's about it for Mario's portion. Let's head over to Ritesh. Let's go.
Thanks, Wilson. I just want to add on to the points that Mario mentioned as well. I guess the bigger aspect that Metaverse is trying to solve is that it can transcend boundaries, right? And that can have huge implications, not just in the gaming world, but beyond. Like we talked about work, we talked about all of these things, and that can make things a lot more efficient. So yes, I mean there are obviously going to be some pushbacks, and there are areas that can have not so great implications and all. But if overall things can evolve to a state where you can control some of them, but at the same time the broader goal is achieved, I think that's where Metaverse serves a much broader thing to solve for. Just a trip down memory lane, I remember back in the days, this is like 2002 when I joined my undergrad, and back then this was the first year when we did not have much internet connection and stuff like that. Only in the second year we got LAN, and it was huge because suddenly with LAN we can play multiplayer gaming and all. And back in those days we used to play Age of Empires, Counter-Strike, like those kind of games, and people did get addicted and hooked on to these kind of games and all. But it was also a way for us to kind of come together and participate in a common kind of thing. And what has happened is over the years, things have changed so dramatically. And of course, through that phase, I did, spend a good amount of time playing these games. And then, obviously things became more serious. I went on to join professionally, in a job and everything. So the time spent in these activities reduced. But, suddenly in 2018, someone, one of my friends called me up and said that, do you know about Steam? And now we can play Age of Empires virtually across the world on Steam. And that was like the first time I connected with a lot of my old friends through this platform called Steam, where we then sort of downloaded Age of Empires and then played it together. So again, very, very interesting things are coming in. And I'm again consider myself not too much of an expert in this segment, but the way things are evolving, the implications and where it can lead us to could be huge. All right, so let me share my screen in terms of how can Syfe be helpful, right? Now, just a quick introduction to Syfe. So Syfe is a Singapore headquartered and MAS licensed digital investment platform. We believe in making investments accessible to everyone. Our vision is to democratize investments and make it super affordable, super smart, and very, very intuitive for everyone to kickstart their investment journey. In terms of the platform itself, we are a one-stop platform. We have our wealth platform that offers curated, ready-made portfolios. So if you are someone who doesn't know how to go about their investment process, we do the heavy lifting for you in terms of thinking through what are the different ways to construct your portfolio and to cater to different goals that you have, whether it is short-term, medium-term, long-term goals. So that's where our curated and personalized portfolios come into play. If you have a view on the market and you want to take exposure to certain mega trends and themes, that's also available through our wealth platform, through our thematic portfolios. At the same time, if there are people who want to custom build their portfolio, there is a first in this part of the world, a custom portfolio builder through ETFs that we have on our wealth platform too. And we'll talk a little bit more on that a little bit later. And more recently, we just added the Syfe Trade platform, where if you are someone who knows what you want to buy and you want to take exposure to single stocks, then you can utilize our Syfe Trade platform. And again, one of its kind, it's a neo broker that we have launched where you get free trades as well as fractional, kind of ownership into individual companies. So if you are someone who wants to invest into Amazon, you don't need to spend $3,000, $4,000. You can basically get a fraction of Amazon based on whatever amount that you're comfortable with. Safety is our key priority. We are licensed by the Monetary Authority of Singapore. We have what is called a Capital Market Services license. This is one of the kind of the gold standard in terms of money management industry within Singapore. And it requires us to adhere to very strict requirements from MAS in terms of making sure that client assets are protected. And the way it is done is basically all client assets and client funds are required to be kept completely separate from our own funds. And because of that, in an unlikely scenario that something happens to Syfe, we are not allowed to touch client monies and use it for our own purposes. What that means is your money is safe and you will be able to redeem them in full. In terms of our journey so far, we started off 2019, little over 2.5 years. Happy to showcase that we've had an incredible journey. Also the COVID crisis, though it was not great, also acted as a catalyst, not just on the metaverse side, but also in terms of adoption of digital wealth management and investment management platforms. So fast forward 2022, we are now one of the leading personal finance apps in Singapore. We recently awarded the best digital advisory solution. We are constantly rated as the most popular digital investment platform in Singapore and regionally as well. We are very well backed too. So we have raised a total funding of USD $52 million with our Series B funding round coming in from our, one of our lead investors called Valar Ventures, which is basically the venture capital arm of Peter Thiel, who is an early investor into Facebook, Meta, as well as founder of PayPal. And most recently, last month, we launched our Syfe Trade platform. In terms of our overall investment philosophy, we highly espouse what is called a core satellite framework of investing. What that means is when you're looking to invest for your goals, and these are long-term goals, you should first construct a diversified portfolio, which basically should be multi-asset, should be across geography, across sectors. And that should help you in terms of making sure that depending on where the markets are and if there are drawdowns and all, you're able to navigate through these periods in a much more effective manner. Typically, core portfolios, we recommend to use passive investment strategies to construct your core portfolios, because then it makes it super efficient in terms of cost, as well as you get the market returns, right? So you don't have to worry about whether your particular strategy will overperform, underperform. It will perform according to the markets as such, and it achieves natural diversification as well. On top of that, we understand that everyone is unique. Everyone wants to express themselves and want to take exposure into different kind of segments in the market where they might want to express their views, or they want to align to their values or any other things. So that's where satellite investment strategies can come into play, whether these are individual mega trends, whether these are themes or otherwise. You can see here that if you're constructing your core portfolio using broad-based index strategies, you can think of constructing your satellites, where if you want to take specific exposures to countries, regions, sectors, mega trends, themes, or even single stocks, those are the ones that you can then layer on top of your core strategy to get those exposure. And if you want to express yourselves, that's the way we recommend people to do it, because ideally what should happen is with a diversified portfolio, you mitigate the overall risk of your investments and keep yourself from panicking and liquidating your investments when situations such as what is unfolding right now happen. And if the satellites then are a smaller portion of your allocations, even though they might have wild rides, you can basically hold them longer and keep investing in smaller chunks to dollar cost average and stuff like that. So, coming to our suite of portfolios, we have our core portfolios. So that is the portfolio which is basically across equities, bond, and gold. Again, depending on your investment time horizon, depending on your risk appetite, you can choose a more conservative portfolio, or you can go a more aggressive portfolio. So the defensive is around 20% equity, balanced is 40% equity, growth is 70% equity, and equity 100 is 100% equity portfolio. Again, globally diversified as well, across sectors, across asset classes. Then in terms of satellite portfolios, we do have certain thematic portfolios. These were launched somewhere in September last year. ESG and clean energy has been highly popular on our platform, but equally popular also have been things like healthcare, disruptive technology, China growth. Even again, given China has had a rough period over the last few months and quarters, but this is again a high growth area, so people do get interested in terms of waiting for the recovery cycle to play out for China. We also have a very highly popular, local Singapore dollar denominated REITs portfolio. So this is something which is liked a lot by people locally because it gives a high dividend yield close to 5%. And given the low interest rate environment, something that is very attractive in the current situation. Something that I want to highlight here, the custom portfolio. This is where things become very, very interesting. So we don't have a metaverse theme portfolio yet. Maybe it will come soon. But if you want to construct a metaverse related portfolio, and either you want to add it as your satellite portfolio, or you want to construct your own core portfolio with metaverse related attributes in it, you can use our custom portfolio builder to do and achieve that. And I'll showcase a few things about it in the next few slides. We have a cash management solution that gives a projected return of 1.2%, much better than what you're getting at the banks. And there are no gimmicks associated in terms of lockups, limits, tiers. It is using money market and short duration bond funds to achieve this projected return. And last but not the least, we have the trade platform, as I said. So if you are someone who knows what you want to buy and you want to take exposure into some of these companies that we were talking about individually, then you can do so through the trade platform. So this is how you can then achieve a core satellite kind of investment strategy using Syfe portfolios. Of course, there are many other ways to go about doing it as well. But if you are planning to use the Syfe platform, then this is something that you can do through us too. All right, so let's go a little bit more, about Metaverse. I think a lot of this is already covered by Mario. So I will not go into super depth about these things. But in general, if you think about it, Metaverse seeks to create an interactive and shared digital world that brings together kind of mixed reality, right? Like augmented as well as virtual reality, along with, say, 3D holographic avatars, Internet of Things, and other things as well. They are really the future of the current internet as it combines different elements such as blockchain, NFT, gaming, semiconductor industry. Overall, still very early stage of development, but they're growing massively and the opportunities could be endless. So what are these opportunities, right? So Metaverse basically is made up of all these different layers. Again, Mario had covered them pretty well previously. So I'll just run them quickly through. Each layer is basically built for different purposes, such as, say, again, gaming, e-commerce, experience, design tools, workflow for creator economy, and the likes as well. There is obviously also edge computing, blockchain for decentralization. These are all advancements that will further change the way we work or the way we socialize going forward. In terms of the overall metaverse market map, you can see that it consists of different companies that support each layer. Now, there are some companies that focus on certain specific layers, but there are also companies that are involved in multiple layers as well. So to capitalize on this trend and capitalize on them, investors can actually explore ETFs to achieve diversification in their investments. So you can go and invest into these individual stocks as well. But we believe, again, given the volatile nature of these individual companies, and maybe you do not have enough time to do the research, the easiest way for you to take exposure into them will be via ETFs. This is a sample kind of an ETF portfolio that people can think of constructing using the Syfe Custom platform. Of course, we have the Roundhill Metaverse ETF on our platform. But if you want very specific exposures within the different layers that we talked about, then there are some other ETFs that you could think about as well. So Mario already covered the Roundhill Metaverse ETF. I think it actually makes it possible for you to invest through just this one ETF. You can actually invest into all the different layers. I think Mario covered that pretty well. So if you just want one-stop solution in terms of getting exposure to the broader metaverse world, then this is the ETF that you can look up to. Of course, if you want to go a little bit more specific, say into gaming and esports, then there is ESPO that is available on our platform, which gives you exposure to companies involved in video game development, esports, related hardware and software as well. So, again, likes of Activision, Blizzard, recently acquired by Microsoft, Tencent, and Nintendo, and otherwise as well. Blockchain, this is where within Metaverse, blockchain technologies, do enable value exchange between software as well as decentralization, and to get on board this sector, investors can really look forward to finding companies actively involved in the development and utilization of these blockchain technologies. So you do have mining companies, you have exchanges, and you have other, enablers like Nvidia, again, coming in as part of this blockchain ETF. Of course, cloud computing is inseparable from Metaverse. So as investors can position themselves to benefit from the increased adoption of cloud computing technologies, and that is really required from a computation, storage, and machine learning standpoint on the Metaverse as well. Last but not the least, I think this is the biggest enabler of the Metaverse and beyond as well. The semiconductor industry supports the infrastructure and hardware that Metaverse requires with the chip manufacturing and AR/VR devices. So, again, companies such as Nvidia, Qualcomm, Intel, Broadcom, all of these, Taiwan, semiconductor company, all of these are, companies that can give you that specific exposure if you want as a specific layer, if you want to get that particular exposure. All right, so I'll just go back to the original different kind of ETFs that are available through our custom portfolio. If you want to take ETF-based exposure into the Metaverse, in terms of how you can set yourself up, there is no minimum to invest onto our platform, so you can just come in and get started. The management fee, of course, keeps coming down the more you invest onto the platform. So it starts at 0.65%, but if you become a black tier, gold tier, or private wealth client, the fee progressively keeps coming down. Also, by the way, a lot of things are covered within the fees. So there is no other trading fee. This is kind of an all-encompassing fee that you're paying for the management of your portfolios. There are no entry fees, exit fees. There are no minimum balances to maintain. You can take your money out at any point of time. The portfolios, especially the ready-made portfolios, the discretionary managed by us, are rebalanced, periodically, and those rebalancing are done free of cost to you as well. You can move between portfolios without any extra cost incurring to you. Dividends are automatically reinvested. So it's all very, very efficient. And again, for someone who doesn't know where to get started, this could be a great way for you to kickstart your investment journey. On the Syfe trade side, we have an introductory offer of 5 free trades per month, as well as only $0.99 per trade thereafter. After March 31st, then you'll have 2 free trades and $1.29 per trade. So I think key thing to note here is even after your free trade, it's a flat fee. So if you are trading in size, say $100,000, you will only incur this, flat fee of $0.99. So very, very incredible in my opinion, in terms of what we are able to bring across. The same kind of institutional offerings that are, previously only available maybe like in the Western world and beyond now is available locally in Singapore too. Last but not the least, we have a very well-established wealth expert team. So if you guys have further questions in terms of understanding our platform better or understanding how to go about solving your specific financial goals and situations, please do reach out to us and we'll be happy to help you out. That's it from my side. So I will stop here and maybe we take a couple more questions, Wilson, before we wrap it up. I'm sure, there should be more questions for Mario.
Yep, correct. All right. So actually one specific questions for Mario will be that, earlier on you actually mentioned regarding Epic Games, right? But then they are not listed on the stock market. So what would actually be the next opportunity or, any other ways that viewers can be exposed to this opportunity?
Sorry, which company did you mention? Epic Games?
Yeah,
Epic Games.
Yeah, so Epic is not listed. like I mentioned, Tencent owns a 40% stake in them. So that is a good way to get exposure. They're a constituent of the fund. Other ways is, look at the virtual platforms that are currently, extremely popular. Roblox, I think, is one of the best parallels, similar to how we're seeing these huge virtual concerts and media events in Fortnite. They partnered with Disney, with apparel companies. Roblox is seeing a lot of those same partnerships, a lot of those same crossovers, and has become a multimedia experience as well. So that is probably the closest parallel in terms of another public company. And then in terms of a company that owns a significant stake, that would be Tencent.
All right, maybe just one more question by our viewer, right? So he's asking, in terms of Metaverse, us working towards a Metaverse, and what will it have impact on like clean energy, since it will take up a lot of like computing powers, or it will take up electricity and stuff like that?
Yeah, and I guess the first thing to touch on is, most blockchains have been transitioning from proof of work to proof of stake. And I won't get into exactly what that means here because I could probably talk for half an hour on it. But essentially, cryptocurrency now isn't going to be underlied by computing power. It's going to be underlied by verification of people who actually own the tokens on that blockchain. And it's a lot cleaner. There's trade-offs in terms of security, but Ethereum is moving that way. Ethereum is the application that almost all decentralized applications are built on. And Ethereum is clearly going to be a very important building block of the metaverse. In terms of other energy stuff, virtual reality headsets, the good thing is they should have pretty long shelf lives, especially as we come closer to the fruition of the metaverse. In terms of creating waste, it doesn't make sense if you buy a VR headset and then 2 years later have to buy a new one, and then you create this huge waste on the environment by disposing it. But probably we'll get to a point that VR headsets are pretty mature and the technology isn't changing much aside from a few firmware updates which can be pushed to your headset remotely rather than having to go out and buy a new one. Kind of similar to what Tesla is doing with cars. I think that's an interesting parallel. But yeah, the energy impact, I think, there will be an energy impact, but a lot of it will be part of the transition from the mobile internet to the metaverse, rather than adding on a lot more energy consumption on top of mobile. Because again, this is a transition rather than an addition.
Right, awesome. So maybe before we end this whole webinar tonight, both of you guys maybe want to share some thoughts on how they should go and deal with growing, like for example, this growth kind of ETF, or in this market situation.
Yeah, I think it's important to take a long-term view with anything. If you take your pick with any growth stock, you could be down anywhere from like 30 to 80%, if not more. One of the benefits of a diversified ETF is that you remove some of that idiosyncratic risk and you're focusing on market risk, in this case, the beta of the metaverse. I think our fund's drawdown from the high is somewhere between 30 and 35%. But if you look at any individual name, even Facebook, Meta Platforms, no one would doubt that they're one of the largest companies in the world. They're down 50%. So by having an ETF, you have a diversified basket of things, and you're not betting on what you think will be the premier metaverse name. Instead, you're placing a diversified bet on the entire space. And maybe if you were a master stock picker and you picked the one or two right ones, you would have more outsized returns than with an ETF. Our fund has about 40 names, but it is a way to diversify your risk and still benefit from that tailwind, which I think should be additive over the next 10 years above a generic growth ETF.
All right, thank you. What about you, Ritesh?
Exactly. I think I just want to echo everything that Mario said. No specific variations from that. I think like Meta ETF is one of the most popular ETFs on the thematic side for us on the Syfe Wealth platform. So definitely something of great interest, and people are understanding the space. And while they are trying to dig deeper, I guess getting that diversified exposure is key. And while even getting that diversified exposure, you are seeing drawdowns, but if they're dollar cost averaging, I think this is a great way for them, for investors, to utilize this environment to kind of double down and average out their investments. And if they believe in this whole realm of metaverse from a future standpoint, I'm sure if they look at it 5-year, 10-year down the line, this will just be a small blip.
All right. Okay. So thank you, Ritesh and Mario. I believe the viewers have actually taken away quite a lot in terms of what is metaverse and how they can position themselves in terms of this particular year of how volatile it will be. So thank you everyone for joining in this evening. We hope to see you guys in our future webinar. Thank you.
Yep. Thanks, Wilson.
Thanks, Mario.
Bye, guys.
See ya. Bye-bye.